Are you aware of the profound impact that the choices you make with your money can have on the world around you? Investing is one of the most important financial decisions you'll ever make. It gives you control over your finances and helps you stake claim in the future. That's why it's essential to make wise investments, no matter how small or large they may seem at the moment. For example, if a company invests in local suppliers and manufacturers to help them grow, other companies will follow suit because it benefits everyone in their community. As such, investing in local startups has a ripple effect on the local economy and society as a whole. Donate to charity or support local causes. One simple way you can invest in the world around you is by donating to charity. For example, when you donate money to charity, your effort will help people in need and give them the opportunity for a better future. If you want to help support local causes and community members, then consider investing in local startups or nonprofits. This will have a positive ripple effect on both your personal finances and the economy as a whole. Fund entrepreneurships and growth companies. Entrepreneurs are crucial to any society. They drive innovation and create opportunities for everyone by fostering economic growth in their communities. In order to help fuel this momentum, it's important for us to invest in the entrepreneurs that are both creating and sustaining local economies. By funding these entrepreneurs, you can help them grow and reach their full potential. Investing in local startups is also a low-risk investment because they're building their business with what they've got, the community they live in, and the talent they have on hand. You know you're doing something good for your community when you support those entrepreneurs who will benefit from your investment long-term. Invest in bonds and fixed income securities. Some of the most prudent investments are in bonds and fixed income securities. These investment vehicles are known for their stability, longevity, and often positive return on investment. Bonds, as well as other fixed income investments, offer a steady income stream with low volatility risk. And by investing in bonds, you're helping to fund the U.S. Treasury without taking out any additional risk yourself. If you're not sure where to start investing your money, a good place to start is to set up an automatic savings plan or 401k plan that automatically contributes to your retirement account every month. From there, you can gradually move into more complex investments like stocks if you feel comfortable doing so. Invest in exchange-traded funds, ETFs. An investment option that is often overlooked is exchange-traded funds, ETFs. These investments are a great way to invest in a variety of different assets while still keeping your money in one place. ETFs can be bought and sold on the stock market, but they are less volatile than individual stocks. However, these investments have risks associated with them as well. One risk is that the company may not make any profit at all or even go out of business. In addition, ETFs don't come with protections like FDIC insurance or guaranteed performance like mutual funds do. Invest in peer-toward companies you trust. 62% of Americans have invested in a company that has since gone bankrupt, according to the National Institute for Trial Advocacy. You may not realize it, but these kinds of investments can be incredibly risky. In addition, when a company goes bankrupt or is bought up by another company, investors who trusted the decision-making process are usually left with little to show for their time and money. Let's say you wanted to invest in an environmentally conscious startup that would help the environment. You might think this is a good idea, and you might even decide to support this startup financially by investing in its stock. But if a competitor comes along and invests heavily in the same startup, they will soon take over the market share, leaving your investment obsolete. It's important that you do your research before investing in any companies so that you can avoid these risks. Stay alert for financial opportunities. In addition to the ripple effect on your own community, it's also important to keep an eye on what opportunities exist in the world of investments. The financial markets are constantly changing and always have new opportunities for you. Subscriptions to a newsletter like Forbes may help you stay up to date with new investment options. Conclusion: it's never too late to invest in your financial future. Even if you're young and don't have the means to invest in stocks and bonds, you can still invest in the growth of a company or the local economy. Start by looking for local startups and supporting local causes to have an impact on your community.